Okay, this is Mike Durr, and we are at the Homebuyer Webby. This is November 8th, election night. I was just checking on some of the early returns, and it looks like it's going to be an interesting race. Who knows what's going to happen? I told my wife this morning that I think we'd know early just because most of the critical states are out on the West Coast, or no, it's wrong, on the East Coast, which is obviously an hour ahead of us. So anyway, keep tuned, but obviously I want you to stay tuned to this session 2. I do plan to go over this fast, and this Homebuyer Webby is about the 10 most asked questions from first-time homebuyers, plus the questions that you should be asking. So there's the ones that people ask, and then there are the ones that they should be asking. And I am the Kingwood Mortgage Guy. I claimed that title a long time ago. And I want you to be able to reach out to me. One of the ways that you can do that is you can go to kingwoodmortgageguys.com. You can always call me at 281-348-9899, or you can go to the homebuyerwebby.com site, which is the place that we put all this information. And after we go through it, we'll put it up there so that you can review it. And also, we want you to remind your friends and tell everybody that you know about that might be looking for a house. We try to answer these questions as honestly and transparently as we possibly can, giving you the same kind of advice that I'd give to my family. So again, my name is Mike Durr. I do encourage you to look up Kingwood Mortgage Guy and the reviews that are up there. Seems like I get new ones consistently. My email is right there. I am a licensed mortgage banker in this particular case, or a licensed mortgage loan officer or loan originator, and my MLS number is here. And so with that, we're going to move on to this is what we're going to cover tonight. And the first thing we're going to talk about is most of the issues that people ask about are related to money. How much do I have to pay to a realtor? Are there special home buying programs? How much do I need for a down payment? What additional fees are there? What home price can I afford? It's a good question. Other ones, how long does it take? What kind of credit do I need? How many homes should I look at? Will the seller negotiate? And how do I know if it's a good deal? So those are the 10 that we're going to cover tonight. We're also going to talk about some of the other things, but that if the reason I like to do this is at least this way you know what we're going to be talking about. And if it's not your interest, then you can bail. But if you want to go through this with me, then we'll do it right now. Okay? All right. First question was, how much do I have to pay the realtor? Well, you don't pay the realtor. That's the good news. The realtor services, particularly a buying specialist realtor, services to you are free. And your realtor is paid by the seller. So what happens is, when a seller wants to sell their house, they'll contract with a realtor, a listing agent in most cases, and the seller will pay the listing agent a certain amount. The average in our area is about 6%. The way it works is the listing agent gets 3% for selling the property and pays the other 3% to the buyer's agent. So that's how the realtor gets paid. You don't have to pay them. Obviously, if you're going to use a realtor, you want to end up buying a house. They do spend a lot of money driving you around, doing research for you. If you get into a property transaction, they negotiate for you and they serve your best needs to the borrower, which means that you don't have to. And that's usually a very good thing, that you don't have to be involved directly with either the seller or the agent. So their services are free to you, which really helps. Free is good. Next question is, are there special home buying programs out there? And you know what? There are some that are out there. I honestly have tried doing the first-time home buyer program through some special home buying programs, and the 2 times that I tried it, and I thought, well, I'll try it first time, see if it worked. It didn't work. I tried it again, and it didn't work again. And this time I thought I had a really highly qualified, learned something from the first one, did the second one, and it didn't work again. Now, that doesn't mean that they're not out there. That doesn't mean that you're not able to get through them. It just was something that they're not easy. They require a little bit of effort. You have to qualify in many cases. You have to go through some steps, and they do have money for you, but they're hard. So I just suggest that don't give up on them. If you don't have any money to buy a house, that's usually what they're about, is providing down payment money. If you want some suggestions, I can surely give them to you. My picture there is a bureaucracy. Yeah, a lot of times you run into the bureaucratic roadblock, if you will, and it'll slow things down and it'll get you frustrated. So it's really for the stout of heart in regards to qualifying with some of the special home buying programs that are out there. Now, from time to time, nationally, some programs come up and they're good, and we've jumped all over some of those. I just think about 8 years ago when the 8,000. Anyway, I'm not going to waste your time with that. How much money do I need for a down payment? Well, if you're a vet, you need nothing down. There are some additional closing costs, but a lot of times the seller will pay those. If it's FHA, it's 3.5% of the purchase price is the minimum down, and again, you can still get the seller to pay some of the closing costs. Conventional is generally 5%, but there is a 3% program that's out there. And I've done one recently. It had a few more hoops to it than normal. Rates weren't as good as the FHA, but there were reasons that the people wanted to do that as opposed to the FHA. They had good credit, they had reserves, they could do it, and we did it. So that's an option for you also. Next one is, what additional fees are there? So besides the down payment, you're going to have an inspection fee prior to closing. You're going to have an appraisal fee, and that's prior to closing. So those are two fees that are going to come out. Now, one thing that you'll see is that the inspection fee is not, or the inspection is not required, but it's highly recommended. So I wouldn't think of buying a house if I hadn't done or seen an inspection report. Appraisal report is required, and they can cost anywhere from $400 to $575. And it's just one of those things. It's for the lender's purpose to make sure that the property is good collateral. It's for your benefit too, to make sure that you're buying a home that is going to be consistent with what you pay for it. The loan fees, the lender loan fees specifically, you pay for these at closing. You generally don't pay for anything for the loan except maybe the appraisal to the lender until you close. So a lot of times when I work, and sometimes I work on loans that take longer than others, the borrower will sometimes say, well, Mike, how do you get paid? Well, I get paid when we close. So that saves you, because if I don't close your deal, guess what? You're not out any money. Title company fees, kind of the same thing. They're paid at closing. Title company fees could include a survey, which you might pay prior to, but most of the time you pay at closing. And then the last thing that I can think of, and I may be missing some, are the tax and insurance escrows. You pay for those at closing. So you're going to initiate a quote for homeowners insurance, and then when you close, obviously you're going to put some money, well, not necessarily everybody would, but for most first-time home buyers, they're going to create an escrow account that has taxes and insurance in it. Okay? For a detailed mortgage estimate, now I put together a very good detailed mortgage estimate that has a lot of all these fees. It'll tell you what the mortgage payment's going to be. It's going to tell you how much money you're going to bring, and it's a very helpful tool. And so all you got to do is just call me at 281-348-9899, and I'll be glad to work up a detailed mortgage estimate for you. I don't need to pull your credit. All I just need to know is the details about the house and the taxes. If you've got that, we're good. What home price can I afford? Well, that's a great question, and everybody's is a little bit different. We look at the income to debt ratios. We compare your gross income. Now, I want to make sure you understand gross income. That's before any taxes are taken out, against your total debt. So we compare your total income against your total debt, and that gives us a ratio. We actually break the ratio into two parts. We consider your mortgage payment against your income. That's the first ratio. And then we consider your mortgage payment plus all your debt against your gross income, and that's your back ratio. And the back ratio has a certain criteria for different loan products that meets. If it goes over that, then obviously you're not going to be able to buy that much house. If it's within that or below, then you can buy that. I'll give you an example of the ratios, and these make sense. A lot of people will say that your mortgage payment shouldn't be any more than 25% of your gross income. So if you make $4,000 a month, your home payment or your mortgage payment, including your taxes and insurance, shouldn't be more than $1,000. Okay? Now, loan programs allow you to do higher than that. Your total debt can go up to almost 50%. Well, in some cases, it can go over 50% of your gross income. Now, that's tricky. I think you're running into tight waters there, and you're going to be house rich, and you won't be able to do anything else. But the ratios allow you to do that. So in many cases, you can actually buy more house than you probably should, unless there's certain circumstances that make it, you might have a second income, or you might have additional income, you might have somebody living with you, or you might have a spouse that has income that we can't use their income. So there's a lot of things like that, but I encourage you to call me so we can tell you exactly what you qualify for based on your particular situation. The ratio is what tells us what price home you can afford, though. All right, so how long does it take? Well, to find the right home requires patience and thoughtfulness. And the honest truth is, you want to look at a lot of homes. I'd say that. You might find the perfect home on the first home that you look at, but you still want to look at some just to confirm that that is the perfect home. The loan process takes anywhere from 30 to 35 days on the people that have their acts together. You have to have your home inspected. So you're hiring a third party to do that. You have to have the home appraised. It's another third party. And we have to verify the last 2 years of your income and your jobs. We have to let the underwriter review the file. And we have to clear all the underwriting conditions. So allow for 35 days. But in the meantime, that's you will need some time. It could take a week. It could take 2 weeks. It could take months for you to find the right house. And it depends on if you're in a hurry, and it's not always a great idea to be in a hurry when you're buying a home because it's a big expense, and you can make mistakes in this particular arena. When you make a mistake buying a house, it has a lot of zeros at the end of it. So you got to be real careful about that. So just take your time. There's no sense in hurrying. Be discerning. Be thoughtful. Okay, next one is, what kind of credit do I need? Well, what I put up here on the screen is an FHA credit score risk graph and a conventional credit score risk graph. And so what I wanted to share with you, let's do the FHA first. The FHA shows that if you're an FHA rock star if you're at the 680 FICO and above. 660 to 679, they're a little risk, but the key thing on the FHA risk graphs is you can go down to 600 to 619, and you can even go to 580. Now, 580, that's pretty rough credit. That's an indication that people have had some trauma in the past. They just haven't maybe worked their way out of it completely. If you put 10% down, you can still get an FHA loan at a 580 FICO score. It's going to be hard. 600, we do them all the time. It's not the easiest loan in the world. There's a few little hoops that you have to jump through, like you have to go to a home buying seminar, usually for that. It's a risk to the lender. They'll scrutinize it very tightly. It's usually a manual underwrite, but they'll do it. When you get to 620, things, the sun comes out, the rainbows, the unicorn, everything starts getting a lot better when you get to 620 and above on an FHA loan. So let's look at the conventional loan graph, and what they like is 740 FICOs and above. Now, you can do them at 720 to 739, 700, 719. Get below 700, the rates start getting a little more painful. And so, obviously, when you're in that arena, we always try to get you with some of the little tactics that we use to increase your scores in this particular case. And what I wanted to do is I wanted to share you can do a conventional loan but down to 620, but you're going to pay a price for it. It's going to be a higher price loan. The rate's going to be higher. As you go up this chart, the rates get a lot better, and these are the best rates when you have 740 FICO scores. And what I wanted to let you know that if you'd like to know, if you don't know what your credit scores look like, I encourage you to call me. Let's take a look at it and let's see if there's a way that we can raise up your scores so that you, A, either qualify, or B, can improve the potential rates that you can get. I'd love to do that for you. All right, how many homes should I look at? Well, that's kind of like the question we asked a minute ago, but you should look until you find the right one. I mean, that's the real answer. And I encourage you to make a list of the characteristics of the homes that you really want, that you're looking for. I want you to think about what you want. It's an important criteria. And I know first home I bought, I didn't look, I mean, we just wanted a home. We didn't have criteria down. The second home, probably the same thing. It was the third home that I really said, you know what, we ought to think about, and I don't think I said it, I think my wife said it, is that we ought to have a plan as to what we're looking for. And I know that that third house, where we had that plan, it was the hardest one to find. We looked a lot. We were very discerning on that. Well, the truth is we lived in the same house for 24 years. So we made some good choices there. And the house is appreciated very comfortably for us. So we're good about that. But have a plan and be thoughtful. This will help you. This is something that you should do. And if you would like the checklist, the homebuyer's checklist that I put together, I'd love to send that to you. You just got to call me and I'll send it right to you. Okay. All right. Will the seller negotiate? That's a good question. Some will, some won't. It really depends. So here are the things it's going to depend on. How long has it been listed? How motivated is the seller? How many offers are there? Are they occupying the property? Is there financing on the property? So if they're not living there, but there's financing on the property, that means they're paying for a property that they're not using. That gives people some urgency. If they're occupying the property, they may have less urgency. If they are already buying something else, and when their urgency increases is when they have 2 mortgage payments. That's not something that a lot of people like to do. So really, using a great realtor to help you negotiate this and to look for all of these little, they're not red flags, they're flags that would indicate how likely a seller might be willing to negotiate. Will help you a lot. I mean, it'll save you some money. That's one of the things that realtors are really good at, is they have all the data and they can tell if somebody is going to be able to negotiate or not. And a lot of times, I mean, I was involved just this last week in some property sales that the seller or the buyer sold for more than the list price. So those are still going on, even in late 2016. So anyway, it's a good question. How do you know it's a good deal? That's a great question too. And a lot of times you don't always know it's a good question. Now I put this picture up. I like it because it's got the little house and the big house side by side. Now, who would you think had got the better deal here? The guy that lives in the big house or the guy that lives in the small house? And I'm not going to answer that because I don't know. It could be one way or the other. But there are some benefits to being in one of the smaller houses in a neighborhood, because what tends to happen is the value of the bigger houses tend to bring up the little houses. Vice versa, the little house is going to bring down the value of the bigger houses. So I'd rather have somebody bringing my value up than me bringing somebody else's down. But you want to look at comparables. Again, this is a job the realtors will do, and they'll compare when there's an offer out there. They'll say, you know, that price on that house, it's too much. I mean, it's overpriced for the neighborhood is what they're going to say. You also want to look at the amenities. What kind of amenities are? Is the home quality? Is it built by one of the better builders that has a good reputation? You go into a house, is there work required? Some of the best deals are where you actually buy a house that's got some problems with it, but they're not very expensive to fix. Or maybe you're a handy guy or girl, and you know what you need to do to bring that house up to the standards that's going to bring out the quality of it and the value to it. And then time. Let me tell you, time is a real critical thing, because you can live in a home, and I can speak to this firsthand. We lived in our house for a long time before it appreciated hardly at all. And it was just because the market was flat for a long time. Wasn't a lot of increase in the value. And then all of a sudden, boom, it increased like crazy. And then the last one, if you know it's a good deal, is if it works for you. And I go back to the home that I live in. We never anticipated that we'd live in a house 20 plus years, but it served us well. It was in the right community. We liked the schools. It provided for our needs. It was a good long-term choice for us. So those are some of the things that I think would determine if the house is a good deal. It's not always in dollars and cents. Okay, so got through that pretty quick. Let's see. Yeah, I went through that fast. Top 10 questions first-time homebuyers ask. We talked about how much do I have to pay a realtor? Are there special home buying programs? How much do I need for a down payment? What additional fees are there? What home price can I afford? How long does it take to buy a house? What kind of credit do I need? How many homes should I look at? Will the seller negotiate? And how do I know it's a good deal? And I think those are good questions for anybody. And I'll just say that I am the Kingwood Mortgage Guy. I want to thank you for taking the time to watch this short video on the top 10 questions that first-time homebuyers ask, and the ones that they should ask. Again, if you have any questions, I want you to feel free to call me. My number is 281-348-9899. You guys have a great evening, and check those election details. Let's see who wins this sucker. Talk to you soon. Bye-bye.